Well, I think that the market is happy that the president is attempting to get Congress to come to some sort of an agreement. Congress usually can teach Hollywood a thing or two about drama, and that's what they're doing right now. Unfortunately, if they don't come to a favorable conclusion, that might not be positive for stocks. So President Trump's actions really, I think, were met to get the ball rolling once again, and that is what Wall Street is expecting. I think the market feels better because it knows that something will come out of Congress in the next few days. However, the real concern is whether anything additional will come out of Congress. My feeling is if this bill is so hard to structure, then there might not be an opportunity for another bill after that. So the Fed will end up being the support of last resort. And so I think Wall Street might end up deciding to take some profits once this stimulus package has been released. Well, I think that while there's still the possibility that we will end the year on a positive note, I think that we are due for some sort of digestion of gains. I've been saying this for the last couple of weeks, and so I think sooner or later the market will have to pause. It probably will not be going into a new correction, but I do think that we'll digest some of the gains before we move higher, because there still are a lot of worries about what is the message being sent by higher gold prices, by lower dollar, by lower interest rates, etc. So I think investors are worried that maybe the market is telling us that we need to fear more about the coronavirus than we currently are. Energy prices, along with gold, along with metals, along with commodities in general, tend to do fairly well whenever the dollar falls. So it could end up being just a reflex reaction to the weakening U.S. dollar, but also possibly because we are seeing an improvement in global economic growth activity that could signal an increase in demand for energy. Like the movie Rocky, every time you try to count out technology, it brings itself up off of the mat. So I would tend to say that technology, while it definitely has been the outsized leader, maybe we don't count it out just yet. Probably a better tack would be, rather than selling your tech, would be diversifying tech. The sector with the best negative correlation to tech is consumer staples, and they tend to do well. So a 50-50 portfolio of tech and staples has provided a similar return than tech alone since 1990, but with 40% less volatility. I think that the Fed will probably not do anything at the September meeting. They will likely continue to say that they are concerned about the rise in cases of the coronavirus, also say that they are watching very closely the recovery in economic indicators, but because the congressional stimulus package will likely only have been recently passed and enacted, I think the Fed will likely wait until the economy appears as if it's run out of steam before it decides to inject more fuel.